It's 13th of August 2014. This is a brief market update. Starting with the grains, markets remain really in this downward trend, driven by the strong production fundamentals across the world. For the November 14 feed wheat futures, £120 a tonne is really the next level the market has in mind, and we'll try and test this level, if not break below it. One of the European issues that we have at the moment is surrounding wheat quality, particularly in France, but also other member states as well. If those issues materialise, Europe is looking at a much bigger supply of feed wheat, adding to an already promising supply of wider feed grains. This is essentially causing divergence between both feed wheat and milling wheat markets, really acting as an incentive to preserve, identify quality within wheat, and not necessarily just assuming that a particular crop is of feed quality. That's going to be a huge challenge for Europe dealing with these potential quality issues, and really the evolution of the UK market will really depend on how much of the wheat surplus for export is of feed quality and how much is of milling quality. Outside of Europe, there are some key markets that may well be looking to buy more wheat, particularly Algeria and Turkey, as they've basically experienced poor growing conditions for their own domestic crops, and may well be looking to supplement that with imports. Last night we saw the monthly supply and demand estimates out from the USDA, and really continuing the bearish theme on the grain markets. Wheat was probably the headline, and the USDA raising their crop estimate further for the world and creating essentially a record production forecast, really driven by increases in Russia, up 6 million tonnes, a slight increase of 1 million tonnes for the Ukrainian crop. For that particular region, of course, going through a period of real geopolitical change, it's not just the size of the crop which is emphasising the need to sell, it's also cash flow issues as well. Less willingness perhaps for lending to be put out into the industry, and so really increasing the need for rapid sales to really get cash moving through grain supply chains, and that won't be helping this downward trend that we see in the market at the moment. On maize, the USDA were actually less bearish than many were expecting last night. Everyone was expecting quite a big increase in US maize yields, and they were increased, but not to the extent that everyone was expecting. I think this is USDA being quite cautious about their approach to production, probably wanting to see the supportive weather that the states have seen today to continue right through until harvest, and really want to see some actual physical harvest evidence before edging estimates any higher. Interestingly, on a global scale, maize estimates for key producers such as Ukraine and China were left unchanged. Again, USDA probably waiting to see some physical evidence. Not being major issues there, but there are some reports in dryness in some regions which may well compromise the potential of the crop. So the USDA taking a cautious approach and a wait-and-see approach before adjusting their estimates. Definitely a watch area. Into the oilseeds now, and that again is in a very bearish trend right now, really driven by these strong supply fundamentals, not just for rapeseed that we're concerned with in the UK, but of course for soybeans as well, having a huge influence on European oilseed prices. USDA generally gave a bearish flavour in their report last night. They're slightly increasing US production, giving again a negative feel to prices. Going forward, really, I think it's key to remember that the market really does remain heavily focused on production at the moment, and little emphasis around how demand, trade or ending stocks will develop, and that's a big area of uncertainty at the moment. How will importers and overall demand react to lower prices? That's only something that's going to materialise with time, although on the whole there should be there is an expectation that stocks of crops at the end of the 2014-15 marketing year will rise. The key question is by how much, and where will those stocks be? Of course, for Europe we have this wheat quality issue, and the market desperately wants to quantify that issue to see what proportion of the crop will fulfill milling demand and how much of the crop will spill over into an already potentially well supplied feed grain market as well. All of these issues and more, especially as the season goes on and starts to appreciate what's happening in demand, trade and stock location, are going to be covered at this year's Grain Market Outlook Conference being held on the 14th of October in London. So hope to see you there.